Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow.
All right, welcome to Market Call. I'm Dan Nathan, joined as always by Guy C. Adami.
And the extra guitar.
Well, yeah. Well, that was pretty hot, right? So, Guy, you usually say it's 1 o'clock on the East Coast, but I'm in Central Time here, bud. I am at the CME Group's global headquarters, which is pretty dope. This is where risk meets opportunity, Guy, but it's 1 o'clock where you are. How you doing? I think he's doing pretty well. Guy, can you hear me? He cannot hear me. We're just going to get right.
I'm okay. Can you hear me or no?
I can, Guy. I mean, we're having a little bit of a snafu with our studio there. I leave for one day. I go to the CME Group, and, all hell breaks loose here. Let's get into it, Guy, if you can hear me, sir. We had Nvidia. It seemed like the whole investment world was watching that. So Amanda says, now what? We're going to talk a little bit about Nvidia itself. We're going to talk about the semis and what's going on there. Here's the rundown here, people. And here's one. This is a Amanda classic here. You can get with this, or you can get with that. We're going to go through a handful of names that reported in the last 24 hours. And there's some big moves out there. And then the next key test for the stock market. And we know that we have the PCE tomorrow. That is the most famous, or the Fed's, most favored inflation reading. So let's just get right into it. We lost Guy for a little bit. And, we were talking about this report by Nvidia last night as we were doing Fast Money. The numbers came out right before the show. The conference call started at 5. The stock was all over the place. At one point, it was down 8%, which is a pretty big move. We talked about it yesterday. The implied move in the options market was about 12% in either direction. If you did that math on a $3.1 trillion market cap company, we're talking about, close to $350 billion in potential movement. Well, here we are now. I mean, the move seems very muted if you think about it. And the interesting thing to me here is that a lot of other names that play in this generative AI ecosystem, they're basically all trading higher for the most part, which I think is pretty fascinating. So let's just break down a little bit about what's going on with Nvidia. And, the numbers were great, but they weren't as high. This is for the last quarter, the calendar second quarter. They weren't as good as, let's say, what the whisper number might have suggested, right? They came in with 122% EPS growth, but I was talking to Gene Munster of Deepwater Asset Management the other day on OK Computer, and he was suggesting that it's got to be probably 125%, which seems just astounding when you think about the sort of growth that this company has had over the last, let's call it 18 months or so. So the guidance that they gave was, it was good. It just wasn't, again, as high as the whisper. And then what a lot of investors wanted to know was this next iteration of chips. This is the Blackwell chip. It's going to be a greater performance than the current iteration, which is the Hopper. And they've had a difficult time, I guess, getting a high enough yield as they're making these chips. So they pushed out delivery of these. They talked about in the next quarter, or probably the back half of the year, that they're going to have a few $1 billion in Blackwell orders. This is really key to the story going forward, that they're going to have this upgrade cycle as far as the chips. But one of the main points that I took away is that, and this came out during the call, and it might have been one of the reasons why the stock sold off the way it did. Now, it's obviously recovered a great deal. A lot of that has to do with the fact that, if they can't ship this, okay, they're supposedly talking about very low capacity for these guys. Can you hear me? I see you back here.
Hopefully. So I'm sorry, I'm impaling myself.
No, it's okay. But I'm breaking down what we heard last night on Nvidia and the call and what the expectations were. And they were very lofty, but they didn't come in much better than the whisper. And so again, if the supply demand dynamic is coming in more in line, and we've been talking about this for months, there's been double and triple ordering by all these folks that are just dying for these chips, right? Because a lot of these big hyperscalers, that's Google Cloud, it's AWS, and it's obviously it's all, it's basically Meta is also in there. But these folks, if you think about what they're trying to do in Microsoft Azure, they can't be left in the dust by one of these others, right, guys? So let's just talk about a little bit of, what you took away from the Nvidia call and what investors and how they're reacting to this.
So this is my takeaway was this. The margins were fine. I think actually I was surprised by how they sort of hung in there, number one. The magnitude of the guide higher in terms of not absolute number, because obviously, the numbers we're talking about now far outweigh. Remember that guide from $7 billion to $11 billion that got everybody excited? Well, obviously the numbers are much greater now, but the magnitude of the guide on a percentage basis is nowhere near what we saw a while ago, which makes sense. But at a certain point, I think that's going to start to play into the performance of the stock. And, people will say, well, look at this, look at the numbers. We've never seen anything like it before. Yes, and they're being rewarded for it in terms of the valuation, specifically price to sales. But I will tell you that this will start to come back to a more normalized level. And I think to a certain extent, the way it's trading today is indicative of that, although obviously not a disaster by any stretch. I think the broader market is starting to bailing it out a little bit. But I think people have to start to realize that we might start to be on the other side of these huge beats and raises in terms of scope, not in terms of absolute numbers.
Yeah. So to your point about that was 7 billion consensus and they guided to 11 billion. I think that was like maybe a year ago, guy. And you had that huge gap in the stock. That's on a quarterly basis. And what did they just report? They reported like 30 billion in sales.
Right.
So that just gives you a sense of just how much it's run. And I'll just say this, and I said it on Fast Money last night, guy, the percentage of the beats were growing quarter over quarter on a sequential basis last year. And what's happening here is the biggest beat they had was in Q1. Then they just did 122%. That's supposed to decelerate to 76% growth in Q3, the current quarter. And then I think mid 50s or so. So to your point of being on the other side, Doug Cass had a great note from the Street Pro on this exact point. I think it was out this morning. And so talking about this. So again, if the magnitudes of the beats are slowing down, if there's going to be slower than expected margin growth or deceleration, then maybe the story is just kind of full right now, especially if they have push outs in this Blackwell. The last thing I'll just say on this is that I just started alluding to it, guy, before you came back on, is that, when you think about Google Cloud, you think about Microsoft Azure, and you think about Amazon AWS, they've been double ordering, triple ordering, maybe to get hands on these H100s, but they've been building out capacity in such a big way. If they get to a point where they have way too much capacity, let's say that happens in the next few quarters, then the whole trade is done for the time being. Does that make sense to you?
Makes perfect sense. And, if you watched CNBC this morning, Roger McNamee was on, I think it was Squawk on the Street.
Yeah.
And he alluded to some of the things that you're saying now. At a certain point with the investment dollars at companies like Microsoft and Apple and Amazon, there's a litany of companies obviously making these investments, Facebook. There need to see a return on those investment dollars, right? The market's going to demand to see the return on those investment dollars. And I think that's where we are right now, I think, in terms of the trade. So this is not, as I've said 100 times, it's not an indictment of Nvidia at all. But what it's an indictment of, I think, is the market's willingness to pay the valuation, again, in terms of price to revenue that they pay. Historically, and you know this a lot better than I do, we're looking at a company that next year, I think, and you probably have it in front of you, is going to do about $165 billion or so in revenue. At a $3.2 trillion clip or wherever we are right now, you can do the math. We're talking about, and I'm rounding, 20 times revenue. That's a number that historically does not last. Now, people will say they're going to grow into that. Well, in order to grow into that, you need to see a reacceleration of the revenue growth that we talked about a few minutes ago. I think what's more reasonable is the market's going to start to see a maturing company, maybe a somewhat maturing industry, and say instead of paying 20 times revenue, we're going to start paying maybe, 10, 11 times. And at a certain point, it'll sift back down to the high single digits where historically these companies trade at.
Yeah, and last point I'll just make here is that if AMD ever gets their act together, guy, and they have a competitive chip, how are they going to compete with Nvidia? They're going to do it on price, right? And so if you think about if there's a second source for a lot of these hyperscalers who are looking to diversify, and you know what, they're going to get kind of pissed off at some point that they've been gouging, Nvidia's been gouging the heck out of them, 75% gross margin. That's gone up like 10 points since ChatGPT was announced. At some point that gross margin is going to come down. The last point, you're talking about monetization and getting a return. So it was in the Wall Street Journal yesterday that OpenAI, that's the Sam Altman led company that actually, as you know, put out ChatGPT late 2022, and they're looking to raise at $100 billion. I think on a trailing basis, guy, they're expected to do $4 billion in sales. You want to talk about a multiple on sales, that's a little nuts. Obviously, that's a private company. So, all right, let's do this. Let's go to the E-minis.
By the way, real quick, I mean, and again, I don't want we're going to look at the futures and stuff, but that's the other point that Roger McNamee made today. They're able to raise money at this valuation, and there's been no real, proof in terms of the things you were just talking about. The market's just willing to throw money at this company, and valuations be damned. But you just said it. I mean, you can do that math as well. So, look, it's great on the way up, right? It's great when everybody's partying and valuations don't matter and every round seemingly is at a different higher valuation. There's the other side of that mountain as well. So there you go.
Yeah, no, I'm with you on that. I mean, one of the things that I find most interesting, and I'll just leave it at this, there was a Wall Street Journal article. Did you see it yesterday talking about that there were Nvidia watch parties where I mean, like, if you want to, like, they say that you don't ring there's nobody who rings the bell at the top. That might be as close as you can get. All right, guy, let's look at the E-mini, the NASDAQ futures here, the 100 E-mini NASDAQ futures. And, it's interesting. And we talked about this a bit. The S&P a few days ago was, 1% from its prior all-time highs that it made in mid-July. And look at how the NASDAQ is much further off of those highs. It's obviously having a pretty decent day today. Thoughts here, because you see that 150-day moving average. By the way, guy, your executive decision the other day to use the 150-day moving average,
brilliant.
I think it was brilliant. Okay, so talk to me a little bit of what you're seeing here and the relative underperformance of the S&P 500.
It's going to be interesting today, I think, Dan, and there's a lot of day left. I want to be crystal freaking clear. But, if we were to turn today and the market's showing no real indication of that, you would have another one of these potential engulfing patterns in terms of the S&P 500. There's a lot of work to be done without question, but the setup to me, and people always say the markets end on whatever piece of good news.
Euphoria.
Assuming that people are viewing that Nvidia report as euphoria. But today really sets up to be a fascinating day ahead of, again, and anticipated the Fed's, what do they call it? The Fed's
favored inflation reading.
Inflation reading, that is tomorrow. To your point, though, I mean, we have the NASDAQ futures up here. I mean, we're going to see, this compared to, if we can pull up the S&P futures real quick, you'll see it's going to look a lot different, Amanda. Yeah. So here, obviously, the S&P's done better. You've had this underperformance. And again, the potential for this engulfing pattern, if you just look, is there. So I'm watching today again, I'm not really sure what this rally was predicated on. Again, I'm sure everybody has their thoughts. There are other things that if you had told me yesterday what Nvidia would report, the fact that it'd be trading 117 or so in the after hours, and then throw on top of that what we heard from Dollar General, which we will get to, and the price action there, and said, okay, guy, where the S&P today would have been down, it's down 80 handles easily. Obviously, we're not there. So the market has a way of sort of throwing a monkey wrench in things on a daily basis.
Monkey Wrench, a song by Foo Fighters, guy. How many Foo Fighters songs do you have on your nearly 900?
Let me look. 0.
All right. So to your point, and you and I have been doing this together for many, many years between Market Call, obviously the last 3.5, 4 years, and then CNBC's Fast Money. And I will tell you this, and I'm not just blowing smoke. You have a really good track record of calling those intraday reversals. Usually you do it on our Fast Money call at 12:30, but with me and Amanda, sometimes you'll say at like 10:30, you'll say, watch this. All right, here are the names that I want to watch okay? And you said a lot of day left, okay? I just want to pull up, maybe Amanda can pull up the day chart of Microsoft. This is one, obviously a huge customer of Nvidia. Watch this one. Google, huge customer of Nvidia. It's up less than 1% right now. So maybe Amanda can look at the day chart here and back that out a little bit so you can see what's going on the day, okay? So if it were to fill in that gap, guy, and basically go unchanged on the day, that would be bad. Google, let's do that, the alphabet. All right. So that's underperforming the broad market. And then I'm going to keep going here. Look at Meta, only up 1%. Look at AMD, up less than 1%. Okay. Look at Taiwan Semi, up a little more than 1%. Taiwan Semi makes all of these NVIDIA chips, right? And so these are the names that I kind of think you want to keep focused on. Does that make sense to you, Guy?
Makes sense to me, because today the market's being carried by appears to be, a handful of names, and Boeing, finally getting off the mat a little bit, so it's not a drag. And then the banks obviously are having a bit of a day here today as well. But to your point, under the surface there are things to be, and people will say, you guys are always looking for the negatives and stuff. Well, yes, that's probably true, because you always try to punch a hole and try to show people the other side of things. But with that said, I mean, there are a lot of things that are glaring today as well. So I'm glad you brought that up. I mean, Microsoft, we have talked about, and again, not an indictment of Microsoft at all, but if you look at Microsoft since, I want to say, the 4th or 5th of July, whenever we started trading after the holiday, it's a stock that's underperformed, obviously bouncing a bit today, but that $468 all-time high, you can do the math. I mean, even with today's bounce, we're about, 10% or so off that high. So just keep these things in mind as we move forward.
Well, Guy, what does that look like to you? That looks like a head and shoulders top to me. And if it can't get, above that prior high from about a week ago, what was that, 435 or something like that? I think it's probably going to go back and test that 150-day. Let's just pull up the SMH really quickly, because I think a right shoulder is, forming here. And you see that 150-day, it's not too far away from that. Let's see how it acts.
Well, the 150 days right there. And again, we've sort of changed tactics here. You obviously had that huge bounce from that August. Look, that August low encompasses that $91 print in Nvidia and a couple of other things. So that's a bit of an outlier. I get it. The bounce was more than I would think, but it bounced. But here we are, seemingly, and I'm air quoting, approaching again the 150. So, if we were to get there again and start to trade through, you're going to start asking yourself, okay, are those lows we saw on August 5th in play again? I would submit yes. And if you go longer term, and I've said this now for a while, and it seemingly doesn't make a lot of sense, but, those prior double highs of 164 or so in a longer term chart that we actually stuck for about a month and a half or 2 months, if you remember, into December of last year. I mean, that little horizontal line across those prior double tops, which is going to basically come right into
the 150.
The 150. That's going to look really very interesting, Dan, Nathan.
Yeah, no, that is interesting. Really quickly, so when we're talking about the S&P futures and the relative outperformance versus the NASDAQ, we know the story here. Amanda can throw up the sector chart that we have. Guy, if you're going to move a little bit out of this secular trend, okay, this would be the Gen AI trade that's been, really dragging the market higher for, more than a year, and it's been very narrow. If we've made that point. Look at the broad base sort of strength that we have today. Maybe it feels a bit more cyclical. You know what I mean? That would be kind of the main story. But before we get to a bunch of the macro stuff, we're going to look at crude. We're going to look at rates. We're going to look at the dollar. We're going to look at gold. We're going to look at Bitcoin in the futures. But let's look at some of these names. And this is I don't know if you caught this when we were doing the rundown, Guy. Amanda came up with this. You can get with this or you can get with that. So we're going to show you two different.
Is that a song that I should know?
Yeah. You should know that. It's from the early 90s here.
But the Beastie Boys?
No, it is not the Beastie Boys. All right. Let's do this because, let's look at Best Buy. Let's look at this gap to new highs. This is a massive one-day gap, right? And when you think about Best Buy, it is the ultimate consumer discretionary name, right? Could you live without another could you live without another flat screen TV? So talk to me about this, and let's look at Dollar Gen. And you've been talking about this name for a very long time. What do you make of these two different stocks going in two different directions based on fundamental news?
Yeah, well, look, Best Buy, if you look at it, it has this sort of rounding bottom. If Carter were here, he would show you, the levels that we traded down to late in 2022 and again late in 2023, and you have this sort of rounding formation. So this move, to a certain extent, makes sense. And I think, as much as it's Best Buy specific, I think this Apple news has probably got people excited as well, and they're trying to connect dots. So it makes sense. But if you go back and look, I mean, the all-time high in Best Buy was probably made in the fall of 2021. So we're still light years away from where we've been. If Amanda can sort of drag that out, you'll see exactly what I'm talking about. So that's that. It makes sense. And you can see what I'm talking about in terms of, we did a lot of work around that sort of 80, 85 level for quite some time. And here we are now. Got it. Dollar Gen to me, is the story of the day. And people will say, well, that's Dollar Gen specific. And to a certain extent, that's true. But all that does to me, Dan, all the commentary that we've heard, and make no mistake, what we're seeing in Dollar Gen is an absolute crash. This is not a small company. And again, if you go longer term, you'll see where we were and where we are now. I mean, that speaks to problems in terms of the consumer. And it's just galvanizing a lot of the things that we've heard from a swath of these retailers. And, I don't know if you want to just sort of ignore it. I think you do it at your own risk. But when you hear commentary after commentary about a slowdown, about a consumer that's being more disciplined, I don't know. I think that's problematic. Obviously problematic for the dollar stores. It's obviously been supportive of Walmart and Costco, which makes sense and something we've talked about forever. But man, oh man, I think it speaks to an economy and a consumer that's strapped.
Well, I mean, listen, I'll just suggest something about what I've heard from a lot of these retailers, and again, look at an A&F if you want to pull that up. Like they had a good quarter and they had a good guidance, but they had this kind of comment about exactly what you're talking about. The flip side of that, and you and I have been talking about this a bunch for like a couple quarters here, and again, not trying to think about things as glass half empty, but there's two different economies right now, right? There's this middle to high end that they're hanging in there, okay, for the most part. And we heard that from, like, say, American Express. We did see Visa and MasterCard talk about, some issues not issues, but like a slowdown in transactions a little bit. Those stocks got hit on that. So the fact that Dollar Gen is having this issue right now with the lower end consumer, and the question you have to ask yourself, especially, and you've been highlighting this as we got unemployment rate above 4%, is it going to start to work itself into other parts of the consumer? So again, that's the big debate though, Guy, you know what I mean? And as we get into the fall or September, and we're almost there, and the Fed, let's pull up the CME Fed funds tracker here. It's a near certainty, right, that we're gonna have 25 basis points, and we would need to I'm curious to see what you think. So what if inflation comes in? What if the PCE is weaker than expected?
Mm-hmm.
Okay. What if the jobs data, I think it's next Friday, is that on the 6th? Okay. Is weaker than expected.
So worse. When you say weaker, you mean the unemployment rate ticks up again and jobs continue to deteriorate.
Correct.
Right.
That deterioration there. But let's say on the flip side of that, yes, on the inflation. So does that put more upward pressure on the likelihood of more rate cuts, right? Like that's where I'm kind of, and if they do, does that help the strapped consumer on the lower end?
That's great. All great questions. I think right now, there's 100 basis points of cuts priced in the remainder of this year, I think. So if I'm off by 25 basis points, so that's already baked in. What you're saying is if we see a softer, calmer PC inflation numbers, so inflation continuing to sort of trend lower, and then you get on the back of that a worsening jobs number, is that only going to add fuel to the rate cut fire, and will they start pricing more in? I guess, but again, what you're talking about seemingly is, the inflation slowdown can be basically, I think, explained by a slowing economy, although the flip side of that, the GDP number was good. So there's so many cross currents here, but it's a job number that should be concerning, I think. So people will look at rate cuts as some sort of salve for the market. But at all-time highs in the S&P, which we're effectively at, what has the market been pricing in all along? So if you go back and look outside of 95 or so, when rates start to being cut, typically it's where the market starts topping out. And I don't think it's going to be any different this time.
Yeah, no, that makes some sense. All right, let's look at a couple other names that are kind of acting pretty contrary today after earnings. So this Salesforce, I don't know if you want to give your 2 cents here, Guy. You know, the expectations did get ratcheted down after that huge gap that we saw a few months ago on that other earnings print, and so maybe they were climbing over what wasn't the highest of bars here. Do you know what I'm saying? So some of the commentary there, some of the results, I mean, it's kind of mixed. You know, better than expected quarter, but some metrics as far as the guidance were a bit soft. I mean, the stock is having somewhat of a muted reaction here. Thoughts on Salesforce? And then I just want to show you really quickly because it gives you this juxtaposition. But here's an enterprise software company, Okta, and it's getting murdered right now. You know what I mean?
Yeah.
So we're seeing a lot of divergent action within the same sectors.
What I thought in terms of Salesforce, we talked about it yesterday with Liz, that, you know, if you saw a sell-off in semis and if Nvidia sort of, you know, cratered, and I don't think today is a crater by any stretch, I thought some of those investment dollars would find their way into software stocks, and it really hasn't happened. I thought the Salesforce quarter was fine. We talked about it on Fast Money last night. I don't think it was great by any stretch of imagination. And quite frankly, on what's a pretty good tape today, this muted response to your point, I think it's up 0.25% is exactly that, muted. So I still think there's some, in my opinion, I still think there's some valuations concerns around names like Salesforce. Again, in order for these names, I think, to get back on their horse, I think it has to be a rotation type of thing into software, which we're not seeing. The other one that I thought was pretty interesting, and obviously it's a little bit of a different world, you know, is CrowdStrike, which is up, I think, 5% or so today. An interesting day. I mean, to me, this is a bit of a relief rally off that obviously horrible news that we saw, I don't know what it was, 3.5 or 4 weeks or so ago.
Yeah.
So again, the cross currents in this market continue to be extreme, in a word. But, you know, I don't think there was anything necessarily exciting about either. I think Salesforce, you have a valuation concern. I think in terms of CrowdStrike, it's more of a relief rally off an oversold condition.
Yeah, let's look at a Pure Storage. So, Guy, this is a flash storage company. You know, their products go into some of these servers that go into the data centers that are powering some of the Gen AI training cycles here. You know, you see this one getting hit hard. We don't really, I mean, you just see the gap, and it's getting back to those August 5th lows. It's through the 150-day moving average. The technicals don't look great here, but I think in situations where the guidance is poor, they're shooting first and asking questions later, you know, if you think about that. And then let's look at a Dell, you know, so this is obviously a stock that, you know, they have a lot of positive commentary around demand for their servers that are going into these data centers. It reports after the close tonight. You have a high implied move, but let's just think about this. Okay. We talked yesterday on Market Call about some of these names in the ecosystem. Micron was one, AMD was another, that have basically round tripped the whole move over the last few months or so since they joined the party as far as this Gen AI party. What are your thoughts here? Because obviously expectations are much lower than they were, let's say, a few quarters ago. The stock was trading, you know, north of 175. The quarter and the guidance just wasn't good enough. And then you see this move from 175. It almost got down to 75 bucks, right? So talk to me a little bit about, you know, a performance of a Pure Storage. And then on the flip side, you see a Dell that's about to report. And I'm just curious whether you think we're going to see some pretty good price action one way or the other in the Dell.
I think the good news for Dell is, you know, you filled that gap that we created back in the spring, that gap to the upside, right? That little move down in April didn't do it, but this move we just saw obviously in the beginning of August filled that gap. You know, we're right up against the moving average. I look at this again, valuation, you could actually wrap your head around a little bit. This, people are saying this is sort of the hardware play of AI. You know, I think if they come in and don't disappoint in terms of guidance, you know, there's a chance that you see that 12% move to the upside, or 10% move, excuse me, which is about a $12 move. 125 probably gets you right around or ish to the 150 days. So that's what I think could happen. You know, maybe a relief rally again off an oversold condition. Understand that we have bounced since beginning of August.
Yeah, no doubt about that. I mean, this is one, you know, you could say the same thing with Micron, maybe the AMD. Like you hear analysts talk about, you know, a stock being de-risked relative to expectations. You know, you have that sort of reversal over a period of time, and that's what happens here. But again, a 10% implied move in either direction makes some sense when you go back to March and you see that gap, and then you go to late May and you see that gap. So Pretty interesting stuff. All right. We just touched on what we are seeing in the CME Fed Watch tool here, and maybe Amanda can go to November a bit. You just said there's 100 basis points being priced in.
I think so.
Yeah, ish of cuts, and the CME the tool, this Fed Watch tool will kind of give us a sense for that, as we get by. Listen, I think there's a very strong likelihood you can see in what we showed you about September. It's a near guarantee that you're going to get 25 basis points, and the percentage you're seeing 33% for 50 basis points is still hanging in there at 33%. Let's look at the 10-year yield though, Guy. And we talked about this the other day, and I was suggesting playing long. You could do it through the futures. You could also do it through the UUP, and we mentioned that earlier in the week. It's almost a perfect double bottom there, and that's a huge short-term move in what we saw just over the last month and a half, and the Dixie going from 106 down to below 101. Not too different, Guy, than we saw back in late last year when we were we were like 108 and went all the way down there. So curious, do you think it holds? It really has a lot to do with the direction of what you think yields are going to do in the near term.
Yeah, so we had I thought we had an interesting conversation about this, but we'll talk about it again, because I think the GDP print obviously puts support in to this. This is the dollar. So you're seeing a bounce in the dollar, get off those bottoms that we saw from back in January. That makes sense. If you were to see a hotter than expected number tomorrow, which there is that chance, I think that will also be supportive of the dollar. So I do think you can play the dollar from the long side. TLT, if you want to throw that up, Amanda, is probably going to look, I don't know, it's going to look different, obviously, in terms of the relationship, because that's inverse. But those tops go back to the January. So the same way we had the lows in January in the dollar, if you go across from January of this year, you see very similar tops that we just made. So you could say that you have a bit of a short-term double top right there, and you could see a reversal lower in the TLT, which means yields go up. So I think there's an environment where the dollar could rally, TLT could sell off, meaning yields go higher tomorrow, and then it's a question of what the market does with that. Now, the next question you're going to ask correctly is, what does that all mean for gold? And maybe gold takes a breather under those set of circumstances, but I think that's all it is a breather. So a hotter than expected number, supportive of the dollar, negative for yields. Obviously, TLT probably sells off, and we'll see what happens to gold on the back of that.
Yeah, so that gold is pretty interesting to me. You had that breakout, you were calling for it. We did have about a month ago a gap to new highs, right? And then it's just kind of working a little bit higher on a really low vol sort of move. And there's been some trading days, Guy, where you think that there'd be a bit more volatility, in it. And the fact that it hasn't really had a push
hanging
lower,
in there, man.
Yeah.
And
you see that rising 150-day, pretty interesting. And then let's go to this, because I think it was 2 days ago, you said there was something funky going on in Bitcoin. And so again, you see the dollar rallying a little bit. So maybe that means that, Bitcoin should come in. I just don't think it's that correlated anymore as like a macro risk asset. And I think there's been a whole host of different reasons why there's been demand for it this year. That huge move up was when the ETFs got approved. But one thing I'll just say about this is that, the futures got listed in this, I want to say, Guy, late 2017, right when Amanda, if she can pull this chart back, 5 years or something like that. And what we said at the time back in 2017, it was a retail driven frenzy at that point, right? When we got to those sorts of levels, I think 69,000 was kind of the high. And, the futures became a great hedging tool, and it gave institutions a reason to start getting involved, because obviously they're cleared here on the CME, on the exchange, and there was greater confidence in that. I don't think a lot of institutions had any real confidence in the underlying spot, right? That had to be traded, on some, kind of sketchy exchanges, which actually got shut down, Binance, FTX, like some of those sorts of things. So the futures gave institutions a lot of different ways to hedge or speculate using tight stops and the like. So thoughts here on Bitcoin, because we've talked about the series of lower highs, the series of lower lows. If Amanda wants to kind of now bring it back to a 1 year, it's acting very different than gold is acting right now.
I said it the other day, and it just felt sort of odd to me. I think it was Tuesday. And after the bell on Tuesday, I noticed that Bitcoin had dropped about $3,500, $4,000. I think it got down to 57,000. It's not like I knew anything, but it just was sort of trading peculiarly over the last couple weeks. And I don't really know. And again, I've said this many, many times. I don't know what Bitcoin really is a measure of anymore. It seemingly when it should do well, it doesn't. And when it doesn't make sense that it's doing well, it does. So I'm hard pressed to understand. I'll say this, though. The price action suggests to me there's another leg lower in this thing. And I don't know what that's on the back on. It might be on the back of what we just talked about 7 or so minutes ago. Maybe the dollar bouncing a little bit here and maybe yields sort of bouncing as well. But short of that, Dan, it's not really making a lot of sense to me, other than the fact that it's traded very odd over the last month or so.
Well, I think all you need to know right here, guy, we talked about the NASDAQ, the underperformance relative to the S&P 500. Go look at that move, through the 150-day moving average on August 5th. That's the day that I think the NASDAQ was down a little more than 3%. The S&P was down almost 3%. And so it's just really correlated to the NASDAQ right now. So when you think about one of the main use cases that people suggest, it's a store of value and it's a fight against inflation. Well, inflation's coming down. And the point I'll make is if Amanda wants to do a 5-year again, when the CPI in the summer of 2022, was at 9% or so, look and see, how this was trading, right? And so it sold off, you know what I mean? Pretty aggressively in those years. So it didn't prove to be that much of inflation hedge, guy. You know what I mean?
Well, it's interesting you say, yeah, you're right. I think it was 9.1% that June, and it sold off. Gold probably did as well. And I think it did because it indicated that the Fed had work to do in terms of taming inflation. So what the market was saying there is, the Fed's going to go to work here and they're going to do what they have to do to sort of knock this thing down. So although inflation was a problem, what Bitcoin and gold were probably saying is we're worried that the Fed's going to start to fight it now. And, again, there's no, I don't think there's any book on these things in terms of how to trade it. And in retrospect, things make a lot more sense than at the time. But seemingly when inflation in this instance was at its zenith, that's typically where that asset, at least in the short term, was as well.
It's fascinating. You just said the book on it, right? And far as
Brian Kelly wrote it.
Brian Kelly in 2013 wrote a book called The Bitcoin Big Bang. He was so early to this thing, and there has not been a second since then that he has not owned Bitcoin, which is pretty fascinating. That's probably why you don't see him on CNBC's Fast Money anymore.
Well, he's in Nantucket.
That's right.
Good for him.
You just
watching
doxed
this, no
him.
doubt.
You just doxed him. You know what I mean?
Oh,
so that's fine. So, all right. Last thing before we get to a couple questions here, guy. Crude oil. And we talked about this on Tuesday. And we talked about, again, you use the term funky as it related to Bitcoin. It trades very curious. When you think about all the geopolitical stuff that's going on in the Middle East, there's a huge tanker of oil that the Houthis just bombed, and it's like sitting there burning there. You would think that crude would be acting better. Now, we highlighted the fact that, China demand is probably pretty weak here. But the fact that it's stuck in the mid 70s, it really feels like it's in a downtrend. This is over the last couple months here. And if there was ever any real signs of the potential for a ceasefire in Gaza, I kind of think, and that means that Iran is kind of backed off. Obviously there's kind of the proxies, whether it be the Houthis or the Hezbollah, obviously Hamas here. But if there was ever, the potential for a ceasefire, that means Iran has totally, taken a step back from some of their aggressive stance, despite the fact that Israelis are bombing Hezbollah. So thoughts here, because to me, I think this is going to be headed back towards 70. We're playing it from the short side. We've talked about some of those levels, using the WTI futures here. I think you want to probably look at that 150-day that's kind of flatlined a little bit, guy. But where's your head right now in the crude futures?
What you just said makes sense. The rallies are muted. Historically, the news that we've heard, the rallies would be longer in duration and more violent to the upside, and you're not getting that. So I think on the one hand, you have the geopolitical risks and potential supply disruptions. On the other side of the equation, you have demand destruction in the form of obviously weak China, at least until today's GDP is seemingly weakening United States. So there's cross currents galore. What I do think is interesting, to your point, although the commodity's been sideways to lower, throw up an ExxonMobil, which is probably trading north of $118 or so today. And I think the prior all-time high was at 123. Now, with that said, the backdrop of a broader market at all-time highs, it would stand to reason that these stocks should be as well. But energy has sort of been left for dead. But with that said, energy's hanging in there to a certain extent, especially some of these big cap integrated names. So I still think you want to own these energy stocks, specifically ExxonMobil, even if the commodity were to go sideways to slightly lower from here.
Well, I think your point is pretty solid here, is that, Exxon is acting very contrary to the underlying commodity, right? And so that's one. Look at that series of kind of higher lows there a little bit. You have 150-day that's kind of moving higher. You see where that prior high is. It's probably 123 or so, guy. And, you say to yourself, this sort of relative outperformance is pretty impressive. One thing that, and we've highlighted this, we're thinking about large integrated. I mean, Chevron acts really poorly. Just for our listener, so this will be a question from @Dan_Nathan coming into you, Guy Adami. What would you associate this underperformance from Chevron relative to Exxon? Is there anything specific there that is worth highlighting here?
No, you know what? That is a good point. I haven't looked at it that closely. I mean, some of this M&A noise around these stocks.
Do you think that's it? Do you think that's it? So they're trying to buy Hess, and
I do think.
Well, that makes some sense. Okay, like that's pretty.
I mean, that's that is the answer, and that's something we've been saying for a while. And maybe there's a concern, whatever, that they need to make an acquisition, and they're not seeing the growth. I mean, this is a stock that, you're right, over the last year has underperformed. But if you go sideways over the last few years, I mean, I think the high in this thing was like 172. We're trading about 148 now. So off the prior all-time highs, and it's been flatlining around the same time that a name like Exxon, for example, has been sort of doing the grind higher. And I think, in my opinion, it's probably as simple as that.
Yeah, and I'll just say this, just to kind of put a bow on this entire conversation. I don't know if you have time to take a couple of questions, but my view, and you've heard me say it, personally one-on-one with you on Fast Money, on Market Call, and also on the tape. I just got to a point where I was thinking about the economy, and obviously I'm not an economist, you're not an economist, and the cross currents that we're seeing. I mean, when you see GDP at 3% here, and maybe that's going to get revised lower or whatever, but relative to the rest of the world, who's had a lot of the same dynamics as our economy has been dealing with since coming out of COVID and the like. You say to yourself, how bearish can you get? I'm not saying to buy the market. I'm not saying that whatsoever. But sometimes it's like take your foot off the neck of whatever it is that you're trying to do and just see where it's going. Because, I didn't think the S&P was going to get back towards those July highs for a very long time. And it did. And it's done it in the face of rising unemployment. It's done it in the face of a weakening lower end consumer. It's done it in the face of, delinquencies going higher in certain, whether it be autos, whether it be some other things as it relates to credit card balances and the like. And so maybe it's just, this is the year that it continues to defy gravity a little bit. You know what I mean? Like, I just don't know. But the idea of just continuing trying to compress this market with all these different cross currents, and definitely what a lot of these companies are saying, cross currents. I mean, it just seems like the S&P is about to make new highs. And why do you want to get in front of it? And I'm not saying you personally, you know what I mean?
No, listen, it's been, I mean, trying to forecast and gauge and the broader market has been very difficult, especially when, on August 5th, that Monday, it really appeared as though things were starting to sort of behave in the way that we thought. Obviously, that was a bit short-lived. Should we take a couple questions?
And to the point I just make is just a V reversal. And if you listen to On the Tape with Danny Moses, our partner there, he's been saying this for the better part of a year. This sort of like market is presenting lots of different single stock opportunities. You know what I mean? And what we've been talking about on Market Call is like there's also ways to play the broader market, especially in the futures market, if you can kind of use tight stops, right? And you're looking to kind of play things on a shorter term basis. So all that being said, Guy, let's do some questions.
All right. From Adam B. For Guy, who is better, the Cardinals or the Cubs? Please say the Cardinals. Well, it's a fair question. I think both. I think the Cubs are like a game over 500. I think the Cardinals might be a game under. They're both still alive for that wild card berth, although, the Braves seemingly have righted the ship. I'll say this, Adam. Sonny Gray, who was a Yankee, pitching probably to a 4 ERA. They don't have a lot of guys there that really inspire me. I love Nolan Arenado, but having a bit of an off year, there's not really a lot to love with the Cardinals right now. I think they have to go out to San Diego, over the next couple days. Paul Goldschmidt, obviously great player, having a subpar year in my opinion. I don't know. I'll say the Cardinals just to make you happy, but I think both teams are sort of middle of the pack.
All right. So two things, Adam B. You kind of touched on something. I mean, Guy did not see that question until like 1 minute ago, and he could probably go on that sort of situation. You think, what do you say, Guy, that you have a memory like a what?
Well, what is that big gray thing?
It's called an elephant.
Yes.
And so as it relates to markets, you do. But I think you have broader range when it goes to sports. And a little inside baseball here, and you saw what I did there. Tim Seymour on Fast Money and Guy Adami, if you knew what went on between those two guys in the commercial breaks of our show, they are pulling things, last night, I don't even know what you're saying because I kind of tuned it out after 30 seconds. You guys started naming the lineup of a baseball team from the late 70s, which is just absolutely fascinating. The last thing I'll say is, why am I in Chicago? Well, I'm here to see our friends at the CME Group, but I'm also going to spend some time this weekend at Wrigley Field. It's not baseball. I'm not even going to get into it, but I'm super excited to be here in Chicago.
So if I tell people what you're doing, is that Dex thing you talk about all the time?
All right. I'm going to see Pearl Jam tonight with a couple old friends. And
you're going tonight? Today's Thursday, right?
And then on Saturday, I'm going with some of our great friends.
And then you're going again on Saturday.
Yeah. And then you ready for this, Guy?
I'm going Pearl Jam again.
Yeah. And then I'm coming back to New York, and I'm going to see him at MSG, the world's most famous what?
See who at MSG?
Pearl Jam. I'm going to see them on Tuesday and Wednesday night. How about that?
So wait a second. So just bear. I'm sorry, Amanda. So you're going to see Pearl Jam tonight.
Yeah.
Then you're going to see Pearl Jam Saturday in Chicago.
Yeah.
At the same venue. And then you're going to see Pearl Jam next week twice at Madison Square Garden.
Yeah. And I was supposed to go next Saturday in Philly, and I think I have to bail on that. That would be a little too much. All right. Do we have time for one more question, Guy?
Yeah, I have a question. Why? Okay. Here's a quick one. Do you okay. Here's a good one for you, Dan.
Okay.
Do you think, and we talked about this, but the question from Darren is, do you think super micro issues are bullish or bearish for Dell tonight? But I'll broaden it out and say, are we not making enough out of the super micro news, or are we making too much out of it?
Well, not at all. I mean, the one thing I would just say on that is, like, if you read that Hindenburg report, and I think Amanda put it in the show notes yesterday when we were talking about it, it is horrible. And then if you think like all the different reasons why they put out this short report, it sounds like there's some funky stuff going on. We've been talking about this name for a few weeks since they reported. Stock, really had a horrible day on some of the guidance and some of the things that they had to say about gross margins. And we made this point again and again. They reported 11% gross margin, down from 17% a year ago. Dell, one of their bigger competitors in the server space, the servers, again, that go into the data centers that are being used to kind of train these large language models and the like, and for the hyperscalers and the like, this is a really low margin business. And if you've seen the run that we've seen in the interest in generative AI, and they're only getting 11% gross margin, why would you invest in this company, right? When Dell could be beating the snot out of these guys, double the gross margin. So, to me, like, this is not an interesting story, especially when you think about all the Fugazi stuff they're being accused of. To me, it's a no touch guy.
Darren, real quick again, Darren, since you've asked too, and I appreciate that, is Lululemon de-risked in terms of the earnings report? So I think the stock traded down to about 226 or so a couple of weeks ago. I think it's trading 260 or so now. I guess Amanda could probably throw it up. Yeah, there it is. Is it de-risked? I guess for a trade, maybe so. Maybe you'll get some relief rally, but I do think it's going to be short-lived. And when I see more and more of these different retailers saying what they're saying, and Jeff Mackey used to say this back in the day, specialty retail is where hope goes to die. And if you go longer term, what he says makes a lot of sense. On the way up, when there's growth in these names, things look like they're never going to stop. But when it turns, and when all of a sudden competition comes in and you start to see a deceleration in terms of that growth and margins start to contract, you see how quickly the market takes these things out to the woodshed. So What I'll say to you is, yeah, maybe you can get a bit of a reflow off of earnings, but I don't think the Lululemon problems are solved by any stretch of the imagination.
Yeah, and my final call yesterday was that if you want to play it on a short-term basis into the print, I think you'd probably do it with call spreads. The implied move is not small, okay, but I just think that you probably get a bounce if the guidance comes in line. You know what I mean? Like, to me, I think the story from an earnings perspective, we've just seen expectations come down a lot and valuations that are pretty reasonable. Again, that means if forward sort of numbers are in place based on what you hear from the guidance. Guy, I want to make one other point because this just hit from the Wall Street Journal. So you were mentioning that the OpenAI, they're going to raise it $100 billion. It's just hitting now that Apple might be investing in this round. And so one of the things I want to make really clear, so Microsoft's invested $13 billion in this company. A big chunk of that comes in the form, Guy, of credits, okay, to basically use Microsoft Azure. That's their, cloud. You know what I mean? So like, think about like like how this is working. They invest in the company, they own a piece of it, but part of that is done through credits that the company OpenAI is using right on Microsoft's cloud service. Well, Apple, when they announced Apple Intelligence, they're basically saying the same thing, that they are not going to be paying OpenAI, but they're going to be able to invest right for the technology that's used in Apple Intelligence. When they launched that service on their Apple 16 Pro, when they announced it on September 9th. So they're basically probably getting a lot of stuff for free in return for an equity investment. Does that make sense to you? And that probably makes the whole thing less interesting.
Barter system, as they say.
Yeah.
So I get it. And again, I think Deirdre Bosa talked about this earlier today. Deirdre obviously co-hosts OK Computer with you. It's all about the market's willingness to put valuations on things that, quite frankly, make no sense in a historic basis. But we've seen that over and over again. It seems like the market will make the same mistakes in terms of valuation, not in terms of the companies, over and over again until they learn the lesson that they seemingly never do. So that's it. Yankees don't play today. Last night, the Yankees lost in Washington. So they lost 2 or 3 to the basically lowly Nats. Okay, that's fine. So I was a little disappointed until then I put the Met game on and watched the Mets, who were down 4-0 to Arizona, come back, tie the game, go up 5-4, only to have their closer serve up a gopher ball in the 9th and lose 8-5. So smile on my face from ear to ear, baby, as the Mets, I think, now find themselves, I want to say, 3 games, if not 4 games, out of the last wild card berth. Dan, back to you.
All right, there you go. That makes you very happy. All right, Guy, it was really fun doing this here from the CME group or from CME group. It's kind of like, how you say the Eagles, and
it's not the Eagles. It's Eagles,
just
the same
Eagles.
way. It's not the CME. It's CME
Correct.
group.
100%. So it was really fun being here. Great team. They got me all sorted out. It's too bad our team. You're looking that way.
Yeah,
you
but we
great.
figured it out, man.
You did figure it out. So thanks to Danny Moses. Check out tomorrow morning's On the Tape podcast. You're there with Danny Moses for the A Block guy. And then Danny had a great conversation with our good friends Porter Collins and Vincent Daniel. So that's going to drop tomorrow morning in the podcast stores, Guy.
See you later, folks.
All right.
Talk
Thanks,
to you
everyone.
soon.
See ya. Bye.